Good morning and welcome to this Monday, August 17th, 2020 edition of Trading Places Live at Earnings Beats. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, it was a pretty eventful week last week. It's going to be an even more eventful week this week for us at Earnings Beats, and we'll get into that in just a couple minutes. But we did see the market, hesitate a little bit at the end of last week. The NASDAQ, we'll get into all the numbers in a minute, but the NASDAQ fell just a bit. But all the major indices really continue to trade pretty bullishly above their key moving averages. We're starting to see rotation and other groups leading or at least aiding the move to the upside. I'd say it's probably still a little early to call the move in industrials leadership. But at least in the short term, we're seeing rotation, and industrials broke out last week, which was just another piece of this wide participation that we want to see in a secular bull market advance. So the market, I think, still is poised for continuing upside. Out of the blue, you can always see a little bit of weakness and maybe a pullback from time to time, but I don't see anything on the horizon at this point that suggests we're in for any kind of a steep drop. And I would continue to trade this market as though it is going to go higher. Want to go over a few things before we get started today. First, I will move over to our website at Earnings Beats. As I mentioned, it is a very big week for us this week. We've got our top 10 stocks webinar coming up on Wednesday. If you look down here at these portfolios, you'll see some pretty nice results. Model portfolio created back in November of 2018. So we're talking about 21 months now that it's been in existence. It's gone through two cyclical bear markets, the trade war Q4 of 2018, and then, of course, the pandemic this year in 2020. And the model portfolio still is up 118.26%. Again, that's in 21 months. The S&P 500 through those bear markets as well, by the way, the S&P 500 up 25%. You don't do that in a secular bear market. You can do it in a secular bull market. You don't do it in a secular bear market. So that's just one more argument, in my opinion, that the market wants to go higher, and we are part of a long-term secular bull market. But those results are pretty strong, and what we do in all of our portfolios is we have 10 equal weighted stocks. We try to get 10 leading stocks and 10 leading industry groups. There's some slight variations, but for the most part, strong stocks and strong industry groups. And every 90 days, we switch them out. Now, there are some stocks, because they continue to be strong, that they stay in the portfolios, or maybe they move from one portfolio to another. But every 90 days, we announce which stocks are going to go into these various portfolios, and Wednesday is the day. So November 19th, we always do this February 19th, May 19th, August 19th, and November 19th. So Wednesday is August 19th. We will be announcing the stocks to make up all of these portfolios. You do need to be a member, though, at Earnings Beats, just a trial member. You just try us out. 30 days, $7. We'll refund you the $7. So literally, it's a no-cost trial. We'd love to have you. And if you come in today and you check us out, we do have an anniversary special running, and even for you, the members, we had said it was going to end on Saturday, but we got a number of emails in from folks who were trying our service and wanted to have a couple more days, and so we agreed to extend it through today. So you have until today, end of day today. Maybe we'll go till midnight, but this is it. So Monday, August 17th, this is the last day. So if you do come in and try us out and you like what you see today and you think you might want to do this, trust me, this is the best deal that we do. It's you buy our service for the year for $697. You get 2 bonus months for free. So that's 14 months. So it works out to $50 a month. Just normal monthly members pay $97 a month. So it's almost 50% off. It's worth checking us out. So if you haven't already checked us out at Earnings Beats, love for you to do so. Also, if you just want to become part of our community, we have a free newsletter, Earnings Beats Digest. Make sure you check that out. All it requires is a name and email address. No credit card. You can unsubscribe at any time. But this will give you an insight as to how we look at the market. And I think there's always some takeaways. Even though you might have a great process set up. You might be very successful in the market. There are probably still a few takeaways that you might be able to get from some of the things that we teach and we look at earnings beats. All right, so make sure you check all of that out. Let's take a look now at what happened on Friday. And you can see the Dow was up 34 points. The S&P was basically flat. Last week, the S&P got up to 33.87. The all-time high intraday is 33.93 and change. So it's been a long road back since those March lows, but we're back. The S&P 500 all the way back. The highest close that we've seen on the S&P is 33.86. We got to 33.87, so we were actually threatening an all-time high close on, it might have been on Thursday that we saw that. But anyway, the S&P 500 has been very strong, continuing to follow the NASDAQ higher. The Dow still has a little bit more work to do. I'd say probably at least another 4 or 5% to get to its all-time high. So it's NASDAQ, then it's S&P, and then it's Dow. That's the order in terms of performance. Mid caps and small caps also strengthening. Again, talking about wide participation in a bull market. Are they leaders? Well, I mean, since March, they've actually done better than the S&P 500. So I guess technically you can call them leaders, but still got some work to do because they really took the big hit back in late February and into March. So that these two groups were hit the hardest. So yes, they've come back more off the bottom, but on a relative basis, they have not broken out to new highs yet versus the S&P 500. So, but we are getting, nice reaction, nice movement higher in those indices as well. So it truly is wide participation right now. Energy, I mean, if there's one group that maybe has struggled to participate, it's probably energy. And it hasn't been horrible. It's just that back since the end of April, we were up challenging 40, and here we are right now up challenging 40. So it's been a flat ride for the last 3 or 4 months, and just about any other group you look at, except maybe airlines, we have seen, continuing push to the upside. So it's been pretty bullish. Even utilities, the defensive utilities group, since the middle part of May. Now it is that this one actually is about even since back in April as well. So maybe utilities you can throw in there with energy. And I'm not sure why I have utilities up here twice. It's really not that important. But these were the groups. These 3 groups right here is what was leading the market on last week, and then utilities were the laggard. Really the only one that was down significantly. So maybe that's why it's worth looking at twice. But this is a group, again, that just hasn't really been performing that well on a relative basis, and it's a defensive group. So I wouldn't expect it to perform that well. All right, let's move on. 10-year Treasury yield. Well, first out this morning, we got the August Empire Manufacturing Survey. Market was expecting 17.0. Came in much lighter than that, 3.7. And that may have something to do with the 10-year Treasury yield moving lower this morning. It's only down a couple basis points, but still, we did get back up above 0.7% last week. We've gotten above the 20-day. We're going to try this again. You remember back in June when financials and industrials, a lot of the stocks that performed poorly during the initial parts of the pandemic back in March, April, they came to life in from the middle of May through early June. Well, they came to life when the 10-year Treasury yield was rising. We're seeing it again here in August. Treasury yield's rising, and we're seeing that money rotate again over into the economically sensitive areas, the transports and the financials and so forth. So I don't know that this continues, but if the 10-year Treasury yield continues moving higher, if we can hold above this 20-day moving average, that suggests a trend. When you go above it and then back down below it, above it, below it, above it, then right back down below it, and then you stay below it and kind of got this, multi-month sideways action, that is not a trend. So short term, we've got this trend, but a real key test is going to be, do we bounce off that rising 20-day the next time we hit it, and do we move to a new high? That would be more of an indication of a trend. And if that's the case, then you want to pay attention to the financials and industrials longer term. But if they continue to go sideways, then it's just going to be this rotation into those two groups and then right back out again. And so right now, I'd say they're just a trade. Are they worth holding for a period of time? Well, depends, I guess, a little bit on your style and your strategy. For me, no, I would trade them and that would be it. I'm not a big fan of holding them longer term just yet. I'm contemplating, again, with our top 10 stocks webinar coming out on Wednesday. I'm looking at some of them, especially on the industrial side, a little bit more so than the financials. But we'll see. I'm still debating that one. Also, August housing market index will be out today at 10 o'clock. And then the rest of the week's pretty light. Got a couple more housing reports, got housing starts due out tomorrow. Existing home sales are out on Friday. And then in between that, we've got our regular initial jobless claims coming out on Thursday. And that's pretty much it. There may have been one other report, I think, due out on Thursday. All right, let's move on. We're going to go into talking technically. And I tell you, this one, I just want to point out to everybody on talking technically about our chart lists. And the reason I want to point it out is, number one, we just updated. I worked all weekend, but we just updated our strong earnings chart list. We now have by far the most companies ever on our strong earnings chart list. Stock Charts only allows 500 companies on a chart list. We almost hit it. 483 companies now. And for those of you who are not familiar, our strong earnings chart list, in order to be included on this chart list, you have to, number one, you must beat Wall Street estimates as to both revenues and earnings in your last quarterly report. You must. No exceptions. Matching isn't good enough. Raising guidance isn't good enough. You've got to beat the last quarter. And it's just that old concept of I want to see companies under promise and over deliver. I want companies where management teams are executing. And so this is the list. Now, the reason why it's so much higher, I think there's probably a couple of reasons for it. I think number one, companies, because of the pandemic, had probably lowered their expectations. That's why the market discounted everything so much back in March. The market, everybody was preparing for the worst. And so everyone was discounting. They were saying, okay, if we've got bad news, we're throwing it out there now. It's a great time to get it out. And so I think there were a lot of companies that just said, hey, this is not going to be good. Many companies didn't even provide guidance, and analysts were left to try to come up with estimates on their own. And so I think that things were just lowballed. So I think that's number one. I think more companies were beating. And when I looked at the number of companies that I saw on the beat list over at Zacks, it was, I think, much, much higher than any other period. So that's number one. I think that's why it's higher. Number two, these companies have to show relative strength, or at least some sort of technical strength, before they're included in here. And I think as we start to see more areas of the market perform well, like materials, like even now industrials, transport's now broken out. These are areas that didn't get a lot of representation on our strong earnings chart list recently because they were underperforming the S&P 500 badly. So many of the companies, even if they were beating earnings estimates, their charts didn't look very good. So I think that's another reason why we had so many this quarter. I suspect as we move throughout the rest of the year, this will go down. I would expect that we'll see fewer and fewer companies as we get through the next couple of quarters. But for now, we got a huge list. And what I wanted to do is, for those of you that are non-members, I want to show you, I've got the strong earnings chart list. In this particular account, I have not updated it yet for what we did this weekend. So I want to just show you in real time how easy this is. So all you do, if you have a stock charts account and it's an extra membership or above, then you can go into your earnings beats account and you can click on this link, but you want to copy this password first. So I'm going to copy the password. I'm going to go into the link. It let me in. That's I didn't think I tried that. Maybe I did do it earlier, but I haven't updated my chart list. In fact, let me go over here for a second, and I want to show you. At least I don't think I updated this. Nope, I didn't. So you can kind of see the first chart that we have on this list is 5392, and we run all the way to 5717. So we had 326 charts, I think, on here prior. Now we have 483. So you can see my strong earnings chart list. That's, starts with 5392. Now let's go back over here. You can see we're starting with 5440 and 5441. Now, why did we drop from 53.92 to 54.39 because those companies are now getting ready to report earnings. These stocks are listed in here in chronological order. So CrowdStrike will be reporting probably in a few weeks. I'm guessing probably early September. So they're still on the list, but they'll be coming off over the next couple of weeks when I update this strong earnings chart list again. Okay, and then we get all the way to the bottom. It would take me a while to scroll there, but you can kind of see we're going in order, 54.45. So we go all the way to like 59.17 or something now, or 59.22, I think. So I'm going to go ahead and just save this chart list. And I'm going to replace, because I've already got it saved. So I'm going to replace my list. And I'm going to go down here to strong earnings, and I'm going to save results. So if you already have this in your account and you wanted to update all my research, everything that I've done, it just immediately will download into your account. So I think I'm having a little problem here. I don't know if it's on my internet connection or if it's stock charts, but normally literally 2-3 seconds, this would be done. So this took a little bit longer, but it might be my internet. I noticed my internet was a little slow this morning. So there you have it. So I've now updated this list. And now when I come back over here, let me go to a different chart list for a second. And now I go back to my strong earnings chart list. And there is CRWD, first one listed now. And I go all the way down, there's the last one, 59.22. So just like that, it took me almost no time, and I was able to download the entire chart list, all the annotations. I annotate a couple of support levels, usually 1 or 2, on the chart that you might want to keep an eye on any pullbacks. And all of that information then is shared with our members. So when you go into this chart list now to do anything, it is, you already know things have been updated. And any company that you look at on this list has beaten its earnings estimates. So you know fundamentally these companies have just reported some good results. So you don't have to guess. You don't have to go into the S&P 500 and look for charts and then say, oh, well, I wonder why this gapped up, or I wonder why this gapped down. You know, was it bad earnings or whatever? You know on the strong earnings chart list that all these companies beat, and I think that's important. All right, I'm going to move on to the emerging markets ETF. So I wanted to look at the global markets for a bit and just kind of see, because I believe we're in a secular bull market globally. I don't think this is just the US. In fact, international markets may go up faster than the US. And even if they don't, if the dollar keeps weakening, we could see some outperformance by these ETFs that track these foreign markets, because when there's a dollar component to the ETFs. So if you think Germany is going to go up faster than the US, let's say the US goes up 10%, Germany goes up 15%, and the dollar is falling, while the German index, say the DAX goes up 15%, the EWG, which is designed to mimic the DAX, may go up 20% if the dollar's falling. So you've got that dollar component. You know, the ETFs will outperform the index that it's designed to track if the dollar is falling. If the dollar is rising, then those foreign ETFs will underperform. Really important to realize that. But here you can see the EEM, and I know John Murphy's been writing about this over at Stock Charts, and I completely agree with him. I mean, this area of the market, the EEM, emerging markets, this is a group that I would expect to do very well, especially as long as the dollar continues to fall. And I think intermediate term, we had a big breakdown recently in the dollar. So could we bounce on the dollar? Yeah, but if we bounce, then I think that might set up a great entry into the EEM relative to the markets that it tracks. Let me see if I can get this, because I know the charts were struggling here. Let me see if I can get this relative to the S&P 500. There we go. Okay, so relative to the S&P 500, it was going up off of the May low, been kind of, you know, tracing back a little sideways. That could be a bull wedge right here. you don't know what a bull wedge is, let me just kind of show you, see if we get a breakout. But on a relative basis, you can see this advance, and then a wedge is just like a squeezing piece of pie. So kind of see that right there. So it's kind of squeezing, narrowing. So if you get a breakout to the upside above this upper trend line, that would be an indication of a bullish relative breakout of the EM. So that's something to watch if you're an ETF trader and you're looking at something, you know, for especially if you like these emerging markets. All right, but I want to go through a couple more of these. Let me pull up EWC. This is Canada. And so here you can see Canada moving higher relative to the S&P. It's tracking, I don't know, pretty close to the this recent relative high. I mean, coming off the March low, we set these reaction relative highs just above 0.0084, maybe around 0.0085. So breaking out above that would give Canada an advantage over the US. Next up, EWG, Germany. So this is probably the one that I follow the most closely. See if we can get this to come up. Come on. There we go. And look at the relative strength here in the EWG versus the S&P 500. Now, the other thing I want to show you is the EWG relative to the DAX. And then after this, we'll move on. Now, look at the EWG. Now, the EWG is supposed to track the German DAX, but it does anything but that. Look at these crazy moves. Why is this happening? Well, let me add the dollar, and I think you will see exactly why it's happening. So I need to make that a little bit bigger. All right, so do you see the dollar movement? It's almost a mirror image. So the dollar doesn't impact the German index. It impacts the relationship between the EWG and the German index. So when you've got the dollar falling like it has been falling, look at the EWG outperforming the DAX. So if we're in a global bull market and you believe that Germany is going to do well, at least as well as the S&P 500, and you also believe the dollar is going to continue its descent, then you want to be in the EWG because it's going to outperform the DAX. Now, if all of a sudden the dollar starts to move back to the upside, your risk is that the dollar begins to rebound, because then you will see the EWG falling. I mean, look at what happened here. The dollar fell beginning of March. Look at that. We shot right up in the EWG. But as soon as that dollar made a big rebound, you lost ground on the EWG. So there's a dollar component that you have to be aware of. A lot of people just get into these foreign ETFs and they think, oh, I'm diversified. And then, you know, you've got the foreign countries doing X, and they don't understand why their ETFs are not keeping up with the foreign indices. Well, it's because the dollar was in a 9-year uptrend. And so it limits your, you know, ability to outperform, because all of those foreign ETFs are underperforming because of that dollar component. So always keep that in mind. All right, moving on. Let's go into earnings, because JD.com reported today, and they reported this morning 50 cents. The market was expecting 39 cents. Last time I looked, actually, we might as well take another look here, but it was up about 5.6% in pre-market. 4.3, so it's still up pretty nicely. 64.75, so we're not breaking out on the open, or at least not based on where we're trading right now. So I would look for more sideways consolidation, but we should see some big volume here. If we do get a breakout, and I would say a close up above 68, 69, that would be very bullish. To the downside, I think we'll hold somewhere in this 57.5 to 60 area. That seems to be where we've been holding on recent pullbacks. So in the meantime, I think we just sideways consolidate, but off of an uptrend, I expect sideways consolidation to ultimately break to the upside. If not with earnings, then somewhere down the road. The other company that reported, this is in the auto space. This is NIU Technologies. They beat 12 cents versus 7 cents, but stock's down about 1.8%. It's been in this uptrend, very similar to JD, except this one looks to open a little bit lower. I would watch down around $17.5, $18. I think as long as that holds, I think we're fine. This one presents a lot more risk probably because this move to the upside we've seen since April 6 to 26. That's a big move. So I wouldn't be surprised maybe one more trip down to 18, maybe shake out a lot of folks, but company is growing its earnings. I would expect maybe to move back toward the upper end of the range after all is said and done. Coming up earnings later this week, we do have Walmart reporting tomorrow. Home Depot reports tomorrow. Our last, one of the stocks in one of our portfolios, I think it's in our income portfolio maybe, Jack Henry, JKHY, they report. Let me pull this chart up. This is the last earnings report we have to get through in our portfolios. But I tell you what, this company is moving up into its earnings report and probably starting to show relative strength again after consolidating for a while. Yep. So here we make the move up. Actually, it was up here we set the high. On a relative basis to the S&P, that's where we marked that high. We were still okay versus the financial administration, even though we were off a couple of earlier highs. We were still quite a bit above where we were 3 months earlier. But when we went through all of this consolidation, and a lot of traders get very impatient, you can see the group was moving up. Jack Henry was not breaking out, and that meant relative deterioration. But we have now started to rebound as we head into earnings. So this is going to be an interesting report here. I think we're going to get good earnings on the stock, but we'll see. But this is the last earnings report we're going to have to deal with. All of our companies have reported. Actually, there's one other, but it reports after we get out of our portfolios on Wednesday at the close, and that's NVIDIA. NVIDIA reports after the bell on Wednesday, and they're in our strong AD portfolio. So, but we don't have to risk it because we won't be in it on that earnings. Also on Wednesday, got Lowe's, TJX, Target, Synopsys, L Brands. L Brands will be a very interesting one. You pull this chart up, I mean, this stock all of a sudden has caught fire. And if we look at this on a relative basis, look at this versus the apparel retailers versus the S&P. L Brands all of a sudden has really caught fire. And I would expect that they're going to hold any pullback around that 23.5 level. Then we've got Thursday, Alibaba reports, Estee Lauder, Ross Stores. Friday, Deere, Foot Locker, but big one there is going to be Deere on Friday. So we still got some pretty big reports coming out, and we'll keep you posted on those. All right, next up, a couple of stocks that were upgraded today I wanted to just discuss real quick. Burlington is one, and Burlington is struggling right now to try to get back through about 200. You know, it's been up into the mid to upper 190s a couple times now. But the problem I'm having with Burlington is its relative strength. All of a sudden, it has completely fallen apart versus the apparel retailers. So while the apparel retailers are starting to move up, this was a relative leader. I would have expected this to move up with it and even lead, and it's gone sideways while the group has been going up. So that's not painting a great picture. I'm not sure about this upgrade. I think Burlington requires a little bit more time to study. I wouldn't be jumping into that one. The other one, however, Form Factor, I think does look pretty interesting. It's in the semiconductors. You can see here that Form, when it got up into the high right here, it was actually a leader in semiconductors. And then it consolidated. You can see it's been in this trend. I could draw probably perfect lines here, a channel. The stock was up pretty nicely, like 30 and change, I think, in pre-market last time I looked. So we might be breaking this downtrend with the upgrade here. And it's in a very strong group. So I actually like Form Factor better than Burlington. We'll see. Last thing, 3 you must see. Let's jump into these. First one I wanted to show you was Align Technology. Do you see this move here back with the heavy volume? See how we gapped down to about 305 and then intraday moved up to about 315? But look at the volume. All the sellers, by the time we got back to 315, the selling really kicked in. We went all the way down to 280. Now when we come back, look where we went on Friday, to about that 315 area before we rolled back over. I don't know. This is one I'd probably be a little careful of. I think we could go lower from here. BDSI. This one had a huge volume. Look at that volume on Friday. Trying to make this breakout. I saw in pre-market it was up a little bit. We need to get a close, confirmed close, maybe even an open above that 525 level. We'll see what happens with this one in just a couple minutes. And then the last one I have for you is Applied Materials. Applied Materials reported their earnings last week. I thought their earnings were great. The stock did clear this high, but came off of that previous high. Look at the volume, though. I think this is one, and probably the biggest point here is that on Friday, it made a 5-month relative high, 5-month relative high versus the semiconductor index. So you've got a stock that's not only strengthening and breaking out, but it's also strengthening versus its peers, and its peers are strong. So I like Applied Materials. I think this one goes higher. All right, that's it for today. I want to thank everybody for tuning in. One quick look at the indexes to see where we open. We are up across the board, NASDAQ leading on a relative basis so far, up 67 points or about 0.75%. Don't forget, we got a couple big events coming up. Max Payne tomorrow night, and then our top 10 stock picks on Wednesday night. They are member-only events. If you want to join us, simply go in here to our homepage at earningsbeats.com, join, hit that button. You'll see what we've got to offer, and you get 30 days, essentially no cost, $7, but then we refund you the $7. And if you're not a member at Stock Charts, I'd suggest you get a 30-day trial there. Combine the two services and let me know what you think after 30 days. Everybody have a great day. Be back tomorrow over at Stock Charts TV for the next episode of Trading Places Live. Have a great day, everybody.